get this going. All right. So let's see what topic I have for today. Um, so I've been doing some research into MicroStrategy, and I'll be doing probably a much better video on this in the next probably later today. Um, but MicroStrategy is looking really interesting. Not as like something to invest in for the as a direct stock, unless you want to, but the cover call option ETFs I'm looking at for MSTR is what's kind of making me a little more excited. So MSTR is MicroStrategy, and basically what they are is a software company. So they do like business intelligence for companies. They offer nice dashboards, things like that. They integrated like AI at some point, and so Michael Saylor is the CEO of MicroStrategy, and he's like a very big proponent for Bitcoin, like a very big proponent for crypto in general and Bitcoin specifically. And even on his own website, he wants to turn MicroStrategy into like a Bitcoin treasury. So this is like really interesting, right? So looking at MicroStrategy and then looking at the cover call ETFs that go against MicroStrategy is also pretty exciting. So, but there's obviously some risks in this, right? There's some risks associated with investing in MicroStrategy or choosing a cover call ETF. There's two of them that I know of, but the one I'm going to focus on is MSTY from YieldMax. So YieldMax, up until this point, has paid out a pretty sizable distribution for its investors, but MicroStrategy, there's really some things wrong with MicroStrategy, uh, which makes me kind of like a little worrisome to invest into MicroStrategy. But I think what I'm gonna do is try to show you guys what I'm talking about here. So let me open up a window and we'll start going through it. So let me get a window open for you guys. I gotta move some stuff around. I don't want to blind you guys with 1,000 windows. All right. I hope you guys can see that. Let me double check. Yeah, you guys should be able to see that. Okay. Oh shit. Let me get my windows all correct here. Okay, so we have MSTR, google.com. We'll switch this to English. We'll go to Google USA. All right, cool. Okay. So MSTR, right? That's MicroStrategy. And like I said, I'm going to do a much more like deeper video on MicroStrategy because it is an interesting company. And what's his name? Michael Saylor is an interesting guy. He's kind of out there. I'm not gonna lie. So we see MicroStrategy in the last 5 years had this like just crazy spike, right? Really crazy. So just again, it's a company that offers basically business solutions, business intelligence dashboards for large companies and corporations. But we see this, right? And what is this very reminiscent of? For some of you who may not know, I got to keep going to Google USA. I'm in Thailand, so. But if we look at the price of Bitcoin, we could see that there's almost a direct correlation with MicroStrategy, the stock, the company, and Bitcoin. All right, so why is this? Well, if we take a look at the MicroStrategy website, where is Micro? Okay, here we go. If we take a look at the MicroStrategy website, and if we go down to mission, or is it mission? No. It's investor relations. We see that they have it right here that MicroStrategy is the world's first and largest Bitcoin treasury company. So not only are they a software as a service company that offers several different products, one of them is MicroStrategy One. They also do like consulting and a couple other different things, but they offer AI analytics. It's cloud native, meaning that they don't have to use Amazon or Google for this. And it's basically just a very fancy, very, very fancy dashboard for business intelligence. And but we know that they're part of, or we know that they're heavy, that they have a lot of Bitcoin on their balance sheet. All right, because Michael Saylor is infamous for this, right? He uses, actually, if we go back to their investor relations, we see that they tell you right here, we leverage our development capabilities, explore innovation in Bitcoin applications, yada, yada, yada. There's another one right here. Oh yeah. Okay. No, this is the sentence. I'm sorry, guys. By using proceeds from equity and debt financings, as well as cash flows from operations, we strategically accumulate Bitcoin and advocate for its role in digital capital. So this line right here is basically telling you that when they issue out shares of MicroStrategy, when they're issuing out shares, they're basically using that money, that equity that they built up, to buy more Bitcoin. Okay. And then they also take on debt to buy Bitcoin, and any cash flow that they have from, selling their product and services, the MicroStrategy One, they're using the proceeds from that to buy more Bitcoin. Right. And they offer a couple different instruments for directly for institutions that want to invest in Bitcoin, but they can't because of, either the fund charter or because the institution is not allowed to invest in cryptocurrencies. So they invest in MicroStrategy, right? They will invest in MicroStrategy. And Michael Saylor's on record for saying this. Very interesting. So very, very interesting that the price of MicroStrategy is almost the same as the price of Bitcoin. And Michael Saylor's whole strategy for MicroStrategy, funny, pun intended, is that he wants to outperform Bitcoin over the long term, right? He wants to be able to outperform Bitcoin. So again, we're looking at Bitcoin and we're looking at MicroStrategy. So again, this is a very interesting company, because if you want to take advantage of the AI, like the AI boom, and take advantage of, Bitcoin as well, like indirectly invest into Bitcoin, then MicroStrategy could be a good play, right? MicroStrategy could be a good play for something like that. You get the best of both worlds. But when you start looking under the hood of MicroStrategy, like, they are hemorrhaging money. Like, they are absolutely hemorrhaging money. They are not doing well. They are not doing well at all. And their year-on-year growth, like revenue-wise, it's not there. They're the typical company, like tech startup, right? And they're not a tech startup. They've been around for a very long time. They've been around since like the late 90s. I hate that I have to keep going to Google USA. But if we look at MSTR stock price, yeah, they've been around since like the 90s, right? And then they had that huge run up for the dot-com bubble burst, and then it blew up. And their price was like disgustingly low, like $5 a share, right? And then it wasn't until they started putting a lot of their money into Bitcoin that they started seeing their share price go up. What's going on, G bro? What's up, man? Oh, appreciate it, man. Thank you. I'm just going over some micro strategy stuff. I'm just talking about micro strategy, and then I'm gonna get into, like some of the yield max fund that invest in the micro strategy. I'm gonna do a more in like a better video in the future, but this is coffee hour, so I'm just kind of just talking my trash, and just kind of sharing what I found so far. But yeah, anyways, about micro strategy. Price tags directly correlate with Bitcoin, right? And Michael Saylor wants MicroStrategy to be an investment where you can invest indirectly into Bitcoin, but also outperform Bitcoin, right? How that works is beyond me. Um, but that'll be left to be seen, because MicroStrategy, like I said, is like hemorrhaging money. They're the typical tech startup story where they're just hemorrhaging money. They're not making any real revenue. I looked at some of their financials last night, and I'm looking and I'm like, man, like how the hell is this company making any money? Like they're losing money year over year, right? But it's because they have like a huge reserve of Bitcoin. I think they have like some 500,000 coins or something like that. Last I looked, or last I checked. But yeah, they have like some 500,000 coins worth of Bitcoin, right? So this is why their balance sheet is so ridiculous, but they are not making money. The company is not making money, right? It's yeah, it just leaves me to believe that, something terrible could happen with this company in the near future. All right, so moving on, right? Because there's a very popular yield max ETF out there that's making waves in the dividend community, in the dividend investing community, and this is called the yield max MISTY, MSTY. So we can take a look. And again, this is going to be all rolled up in a video that I plan to do later, because I want to make it a little more structured. Yield max ETF, but you guys are getting kind of just the research that I've found so far. But yeah, if we're looking at like yield max ETFs, we got to go find MISTY. Oh man, let's go. Put it in the chat, let me know where you guys are watching from. Let me know, what time is it over there? Cause I know I have people from, like I have one guy from London that reached out. I know I have some people from the East Coast and the West Coast. So just curious is all. And I'm starting at 8 o'clock because I think that's when most people are like at home now. I think I'm gonna keep it at 8 o'clock. But anyways, let's go down to MISTY if we can find it here. There it is. Okay. So MISTY is the MicroStrategy Yield Max Option Income ETF, strategy ETF, right? And basically what we want to look at is what they're doing. So the Yield Max MSTR Option Income Strategy is an actively managed fund that seeks to generate monthly income by selling writing call options on MSTR, which is the MicroStrategy company. Okay. MISTY pursues a strategy that aims to harvest compelling yields while retaining capped participation in the price gains of MSTR. All right. What's up, Daniel? Hey, man. G Bros from Iowa. All right. 7:13. All right. Cool. It's not too late for you. All right. Philadelphia, Pennsylvania. Let's go. Hey, welcome, Mark. I don't think I've ever seen you in the chat, so welcome. All right. So back to this, right? So we got Yield Max. This fund has been making a lot of waves. Like it's been making a lot of waves. It's been interesting. A lot of investors, a lot of people have been dumping money into it, and we can see that by its net assets. By just its net assets alone, you have almost $2 billion of investor money in this ETF. So just for an idea of how important this is, you can look at like QYLD, right? Which is what is it? QYLD is, oh my God, I'm drawing a blank. But yeah, anyways, QYLD has, I think, like a couple $1 billion assets under management, and they're from another company. See, I'm tripping up over here, man. All right. Yield. All right. QYLD. I forget who that. Yeah, Global X. Thank you. The Global X NASDAQ 100 cover call ETF. They have, I think, like last I checked, they had like $8 billion assets under management. Yeah, if we look at their price and performance, let's see, maybe it might be right here. Yeah, so they have like $8 billion assets under management, right? And I think JEPQ or JEPI, which is, or more so JEPQ, which is like a competitor for QYLD, they also have about under $10 billion assets under management. That's how much money investors are pouring into these funds, right? Because they want consistent, predictable income from these ETFs, right? Because if you were to have a hypothetical, like let's say $100,000 in this ETF by itself, you know, on paper you'd be making about $12,000 a year, right? $12,000 a year, not bad, not bad. That's almost $1,000 a month, right? But with MSTR, you're going to be getting some ridiculous yield of 102%, right? And they have been paying out a lot. So on a hypothetical 100,000, you could, for the year, you're going to make 100,000, right? Like you're going to be making like, I don't know, like probably 5-6 grand a month or something. It's ridiculous. But yeah, this is what I'm talking about. Anyways, let's get back to it. So you have MSTR. Again, we're going down the rabbit hole. You have Bitcoin. MSTR's price is tied to Bitcoin. And then you have this fund, YieldMax, Misty, doing cover calls against MSTR. Now, the investment objective is to seek income, right? That's the whole point of this fund. It is not going to grow, okay? You're not going to get like appreciation, what's known as capital appreciation. So if you put $100 in here, you may not see like share price appreciation. You'll get the distributions. For sure, you're going to get the distributions, but you may not get the gain, which is also important because when we're talking about deploying capital and deploying money into these funds, we want to keep our money. We don't want to just YOLO it. And then like there's a picture I posted in our YouTube community where it's like a dividend investor will make $150, but he's down 2,000, and then be happy about that, but that's essentially what this is. You have what's called like NAV erosion, but your capital is basically eroding in front of your face. However, this particular fund hasn't seen that, and that's because of the volatility of not only Bitcoin, but MSTR, right? So this is why Misty has been doing so well over this past, couple of months, and they've paid out quite a bit of money. Okay. Let's see. I'm just checking the chats right now. Yeah. So yeah, the wealthy life. Yep. It is hilarious. So yeah, people do drip these, right? Full disclosure right now, I might as well tell you guys, like I'm actually considering putting some money into this. I don't know how much yet, but I'm gonna probably do a little bit and just kind of build up from there. But there's also another position I'm looking at, but I don't want to include that in this live stream because I want to do a little more research on it. But it is interesting. So the bigger picture, right? The bigger picture I'm looking at is Trump is in power. Let's say, all right, let's not make it about politics, but our current president is very favorable to Bitcoin and AI, right? This year is going to be huge for AI and for Bitcoin or crypto in general, right? We're deregulating it. The SEC chair that's coming in, they got rid of Gary Gensler. The SEC chair that's coming in is very crypto friendly. You have a lot of the Libertarian Party that's very pro crypto. They had a huge influence on a lot of this, and they're going to have a huge influence on a lot of the policy going forward. Okay, so I think this will be a huge play for, or a huge year for crypto. Now, why does this all matter for Misty, MSTR, and Bitcoin? All right, because if you want to take advantage, of a strict crypto play, just invest in a Bitcoin, right? And this is not financial advice, but just invest in a Bitcoin. However, if you want to probably outperform and just have a company, and this is a pure capital gain play, right? This is Bitcoin and MSTR are going to be pure capital gain plays, but you also want to have some exposure to, AI. You can think of like a MicroStrategy, right? You can think about putting money into a MicroStrategy stock. Now, if you want to make income and take advantage of the volatility that's going to come with investing in a Bitcoin, right? But still making income from it and having the possibility of capital gains, then I would go with an MSTR. All right. I would honestly go with an MSTR because you're going to get Bitcoin, the volatility of Bitcoin and the volatility of MSTR, which basically translates to higher distribution and capital appreciation for MSTR. Now, now we have some problems here, right? Because this may not be something you want to hold for the long term, because something might change, right? And right now, we're waiting on basically what's going to happen with interest rates. We're still waiting because the Federal Reserve, they talked about not too long ago, they talked about lowering interest rates only 2 times this year, right? Last year they were talking about doing it like 4 times, and now this year they're talking about only doing it 2 times. So how's that going to affect something like MSTR, MSTY, or even Bitcoin? Well, if they're still planning to lower interest rates, right? Period. Like, they are still planning to lower interest rates. However, the Fed is also keeping an eye on inflation, and inflation has not gone away. And because inflation hasn't gone away, and because the Federal Reserve is trying to figure all this out, especially with the incoming president, well, the current president, what is his policies going to be? Because he was talking about putting in tariffs, and now all of a sudden the whole tariff thing is kind of like not really going to happen, because it would cause such a huge amount of inflation in the United States. And when you have inflation, you have the Federal Reserve that may not lower interest rates as much as people thought, and they may even increase rates, right? As crazy as that might sound, or far-fetched, whatever you want to call it. But the Federal Reserve is on record for telling people, or the Federal Reserve is on record for saying that they're going to run models on the potential impacts of what President Trump's tariff policies could have on the economy. So I think right now, like, I want to take advantage of this, and I don't think the tariff thing is going to come true. I just don't see it. China is one of the United States' biggest trade partners. Mexico, Canada, big trade partners. Why would you tariff them, right? Instead, I think what President Trump is trying to do is get them to invest money into America. Like, he just got what's that big company in South Korea? It's called SoftBank. So he just got SoftBank, or is it SoftBank or SoftWorld? SoftBank, I think. Yeah, SoftBank. So he just got SoftBank to invest like $500 billion, I think, into the U.S. economy. Like, they're starting up, they're going to be investing into America. Investment into America. And he just, yeah. So 100 billion. No, it's not 100 billion. No, this is old. 3 days ago, 500 billion right here, right? $500 billion. Like, that is going to boost the American economy. So I can't see like inflation being a problem anymore, or inflation being like a risk in all this. I can't see tariffs being a risk in the future. So I think, and again, this is just my thesis. I'm not telling you guys to go buy this or anything like that. I'm just saying, I'm talking out loud. But I think this would be, if you want income with a small amount of appreciation, I would go with something like Misty. However, if you, again, to summarize all this for anyone that's just coming in, if you want to take advantage of a AI plus a crypto strategy, I would consider MicroStrategy. If you want just a pure play Bitcoin strategy, I would just go with BTC, or you can invest in another one that just came out called IBIT. Right, and I did a video on this. If you guys look back on my crypto, the 3 ETFs, there's an iShares Bitcoin Trust ETF, and this one's fairly recent. But this, excuse me, the weather's like terrible out here in Thailand right now. A lot of smog, and like, it's starting to affect me a little bit. But yeah, I would almost look at this if you want an ETF version of Bitcoin. But there's an expense ratio associated with that, so just keep that in mind. And then you have Bitcoin itself. So, all right, I'm just going to check the chats real quick. So, Mark K asks, what platform brokerage is advised for Misty? So, I would honestly, if you're going to be investing, so there's two trains of thoughts here. for Misty or for any dividend income, like high dividend income, put them in tax advantage accounts like a Roth IRA. Maybe you might have like a self-directed IRA or 401k or something like that, some tax advantage account. I know there might be some Canadian viewers here. I'm not sure what the equivalent of that is, but yes, you want to put these in tax advantage accounts. But if you're someone that wants to kind of live on that income now, I know people, again, shout out to Pay Me in Dividend, but he has his stuff in a standard brokerage account. I also have my stuff in a standard brokerage account, like all my REITs and everything, because I plan to use that income to live off of much sooner than waiting until I'm 59 and a half. And do I have to pay taxes on it? Yes, but I also have, real estate holdings and other things that kind of help me, take that tax burden down a bit. So just something to consider. But yeah, I would, again, it's not about the brokerage, it's about the tax account, right? Is it a taxable brokerage account or is it a tax advantage account? So, again, you consult a CPA, talk to someone who knows more about taxes, because they will tell you. Now, and this is just, again, basically, I'm going down the rabbit hole and looking at stuff. There is something here. Let's see, supplemental tax information that we want to look at. Okay. Oh man, I'm not going to go through all this, but basically there's 3 types of classifications for dividends. Okay. And you guys are getting a master class in this. All right. So make sure you hit that like button. All right. But so there's basically 3 classifications for dividends. There's return of capital, there's qualified dividend income, and the third one is oh my god, I can't believe I'm drawing a blank. Let's look them up. All right, let's look them up. Dividend classification. There's so much stuff. Like my brain is full. So you have no, this is not it. Return of capital. So there's return of capital, there's qualified dividend income. Oh, and regular income. Thank you. Duh. Yeah, and then there's regular income. Okay. So return of capital is not taxed, right? It is not taxed because it's basically they're returning part of your investment back to you. Qualified dividend, they're going to tax you at your nominal tax rate, whatever. I mean, not at your nominal tax rate, but they're going to tax you based on the dividend, right? Based on how much it is, et cetera, right? But for regular income, you'll be taxed at your nominal tax rate. So if you're in a 33% tax bracket, a 25% tax bracket, whatever it is, you're going to be taxed at that rate, right? So this is why it's important to know where the dividend is coming from and what is the classification of that dividend. And this is not talked enough about in the dividend investing space, because I have only skimmed that a lot of the money coming back from Misty is a return of capital. Again, this is something I need to do more research on, so don't take this as fact, but the return of capital is not taxed. So let's say you dropped $100,000 into Misty. It appreciated, let's say 10, 15%. So now it's 115,000, but it gave you $50,000 in dividend. That $50,000 in dividend would be not taxed at all through a return of capital. Now, do not quote me on this, and I'm not a tax person, all right? So please keep that in mind, all right? So again, you have to know where the dividend is coming from, because that is so important. In the real estate space, in REITs, a portion of the dividend is sometimes a return of capital when they sell buildings, right? When they sell buildings, there's a capital gain, qualified dividend piece, and then there's a return of capital, right? And then there's the rental income, which makes up the ordinary income. So yeah, just again, things you need to be aware of. So It's a Wealthy Life asks, is Misty on the NASDAQ? Which exchange? I think it's on the NASDAQ, to be honest. I'm not entirely sure. Let's see if we can find it here. But yeah, I think it's on the NASDAQ. No, it wouldn't be on the NASDAQ. I'm not sure. Yeah. Yeah, it's a wealthy life. You could buy it through Fidelity. I could buy it through M1 Finance, and M1 Finance is kind of notorious for not having every single little fund and ETF out there. Sometimes you have to request them through M1 Finance, and they usually get like they listen to their audience. And again, this is why I love M1 Finance. But if you send them an email and you say, "Hey, I don't see this ETF listed somewhere," they'll say either the assets under management is too low and they don't want to put like a crappy product on their brokerage, or they'll say, "Oh, our bad," and then they'll add it for you. Like they're really good about that. Yeah, IBIT is a IBIT is it's the iShares Bitcoin Trust. So basically, iShares owns like a ton of Bitcoin, and they actually vault it. They actually put it in a vault with I think Coinbase. So Coinbase is the custodian. They're holding the Bitcoin, and then iShares created a trust for the price of Bitcoin, basically for Bitcoin. Now, if you're not familiar with like GLD, which is a gold ETF, it's the same exact thing, right? It's the same exact thing. Spider, they have like this big vault of gold somewhere in the world, and they basically fractionalized gold. They basically just created shares and they created an ETF, so you can indirectly invest into gold, through the stock market. This is not something I personally like or I personally trust. Not because it can go to zero or anything like that, but the tax implications for this is just as bad as owning physical gold, right? But the beauty of owning an ETF is that your portfolio gets exposure to it, right, without owning gold bars. And if you need to sell out of gold to get money, you can, right? Versus owning gold bars or gold in general, like there's going to be transaction costs, there's going to be fees, and you think the broker is going to want to sell you or buy your gold at spot price? No, they're going to want a discount. So the beauty of like a gold ETF is you're getting it at the spot price, which is really nice. So let's see. So Mark K says standard brokerage. Standard brokerage. I like you. Do not want to wait. Oh yeah, appreciate it, brother. Yeah, like so for those who don't know who I am, like I actually live out here in Thailand. I quit my job like last year, so I'm living out here in Thailand. I'm living off basically income that I have coming in, and then yeah, I'm basically just doing this full time. Like I like doing this full time. So I need that dividend income, I need my divvies. All right. G bro, appreciate the like and subscribe, brother. Really appreciate that. It's a Wealthy Life says, the call premium must be ridiculous on MSTR to make it 100%. Yeah. I'm sure it is. I've never done cover calls like, using like, like the actual like app, like Robinhood or something. I've never done cover calls against my holdings. So I know I get the idea behind it. I did a video on it. I get the idea of how cover calls work, but because I'm lazy and dumb, I'd rather just go with a professional fund manager if I had to choose. Okay, let's go back to what we were talking about. So we have Bitcoin. Let's get Bitcoin back up here. All right, let's get back here. G-Bro says, my mind is spinning here. I have Robinhood for trading, etc. What's your opinion on certain platforms? I don't trust Robinhood because of the whole GameStop fiasco, but I'm not going to sit here and say that they're a bad brokerage either. Like they are a trustworthy brokerage. They do, they have a good reputation, I suppose. Their brokerage itself is solid. It does let new investors like get into the game much quicker. And I can't fault Robinhood for that. They are the OG like phone like online brokerage, right? They were the pioneer. So I can't say anything really damaging about them. I just don't trust them because of the GameStop fiasco. With M1 Finance is my preferred brokerage. I'm not sponsored by them or anything, but I do trust them. They have great support. They've done no wrong for me. And they like the thing I like is like Robinhood will allow you to invest in a ton of cryptos, like different cryptos if you want, right? M1 Finance, they only give you access to 3, right? Bitcoin, Ethereum, and I think Litecoin. Like they only want like the stablest of stablest coins on their platform. They don't want to deal with all the meme coin crap because M1 Finance is a platform that was built for like long-term investing, right? And that's my shtick. Like that's what I like. I like long-term investing. I don't think you should be yellowing your cash, right? And just buying a bunch of meme coins and hoping one of them sticks, right? Throwing darts at a dartboard. So I'm more of the camp that I like long-term investments. If I invest money into something, I plan to hold it for a very long time. And M1 Finance only allows you to trade twice during the day, right? In the morning and at night, right? Right before the market closes. So you're really in that investor mindset. You're not trading stocks. You're not looking at tickers. You're not looking at candle charts and all that crap. You're investing. You're investing for the long term. So just my thoughts. And then you have Fidelity, Schwab, and Vanguard. Those are the three big ones. And I used to be with Fidelity. My 401k is still with Fidelity. But I liked Fidelity. There's nothing wrong with them. I just didn't like that they didn't offer fractional shares when I was with them. And then when I migrated off M1 to M1 Finance, that's when I decided, like, that's when they implemented fractional shares. So I was kind of pissed about that, but it is what it is. Yeah, and the other thing about M1 Finance is that you can buy, like, you can create your own ETF essentially, which is kind of neat, right? Not to make this a class on M1 Finance or anything, but you can create your own like ETF, so, like sort of say, right? Maybe one day I'll do a full class on like M1 Finance or something. But anyways, okay, let's get back to this. Retire on dividends. Hey, new person to the channel. MSTR IV is almost 100%, so the premium pays well. Exactly. There we go. I like it. Retire on dividend. I like that name. You're not paying me on dividends, right? I'm gonna have to sub to your channel, brother. Okay. Anyways, getting back to all this. I don't even know where I left off. Yeah, we're talking about the dividend distribution, the classification of dividends. Yeah, so you just want to be careful when you invest into these funds. You need to know where to put them, retirement accounts or not, and then what does a dividend actually classify as? Because if you got 102% distribution, right, and you're getting all your money back, you know, in theory, you're getting all your money back. That is good and all, but if you're going to be paying some obscene taxes on it, like it makes it a little less desirable for some. But like I said, for others, depending on, you know, your tax situation, the tax burden, how much money you make in income and yada, yada, you know, maybe it could be a good option. Maybe it could be a good option for you. That really all depends. And Mark K says Vanguard has excellent customer service and fractional shares. Yep, absolutely. 100%. I'm a huge Vanguard fan. I don't even own anything in Vanguard, but I'm just a huge fan of Vanguard. So yeah, shout out to Vanguard. Shout out to you, Mark K. But okay, let's see what, so yeah, the big theory, right? The big idea of investing into Misty, right? You're going to get, you know, indirect exposure to MicroStrategy, which also holds a ton of Bitcoin. So you're going to be able to get that capital appreciation. You'll be able to get that income. Right. So this is why I'm considering a starting position in Misty, and it's Misty and another one. I'm not going to tell you guys what that other one is yet because I want to do a little more research into it. I do own a little bit of Bitcoin. I used to own a lot, and I'm not talking like 15 coins or anything, but I used to have like, I mean, just to be transparent with you guys, I used to have like 15-ish K, and it was like worth 30 or 35. And that was before it started to pump, right? I don't hate myself for selling out because I did sell a big, like pretty much all of it. I sold it all to move it into a real estate project. But I'm not upset about it, you know? But yes, I still own some Bitcoin, directly into Bitcoin. And then you can also consider like an ETF if you wanted that exposure. So I'm really thinking about this. Like MSTR would, like this interview that Michael Saylor had, who again is the CEO of MicroStrategy. He's offering other investment instruments in MicroStrategy aside from just the stock. You know, he wants to do fixed income. I think he already has like some fixed income instruments, like preferred shares or something. I haven't really dug that deep into MicroStrategy's alternative investments. But he was also saying that he offers bonds against the Bitcoin that his company owns, right? So there's like the risk profile is much less versus owning MicroStrategy common stock. So it's really, really, interesting. And like the more I dig into MicroStrategy, the more interesting it becomes. I've never been a big crypto guy. I've never been a big yield max guy, but I can see why now there's the interest in this. I could really see why the interest is there. So Retired Dividend says, I track Misty trades daily. It's a great fund. Yep. Assets under management is almost $2 billion. Yep, exactly. You know? Yeah, I'm gonna have to, I really want to pull the plug on this one, or pull the trigger on this one, I suppose. Yeah, this is just interesting. So that's pretty much gonna do it for this kind of like miniature deep dive on MSTY, MSTR, and then kind of like the bigger picture. So I mean, what else? Like, let's talk, guys. It's coffee time, man. It's coffee time. I'm just here chilling, and I figured I'd share something, share what I was doing. So, I mean, what are you guys up to? What are you investing in? What are you looking at? What's the market looking like for you? Are you investing in high dividend yielding, stocks, ETFs, or like what's up? Yeah, Tesla is another one. Oh, one thing I did not do. Let me show you guys. Um, I forget let's do portfolio visualizer. Yeah, portfolio visualizer. Let's look at this. Tools. And if you guys have never used this before, I highly recommend you check them out. Like, this is so cool. I like, and I say this every video, but they used to have portfolio visualizer where you could look as far back as you could, but now they only do it up to 10 years. So you can only look back, like back test 10 years. So something to just, again, this is a tool for the tool belt. But let's look at comparisons. How does this compare against the benchmark SPY S&P 500 index, right? So we're gonna call this. We're gonna have Misty here, and we'll throw in some Tesla. All right, we'll throw in some Tesla, and we'll leave this alone. We'll leave that alone. Actually, I want to do MSTR. Let's do MSTR. Yeah, let's get rid of this one. Let's do MSTR. Let's do Misty and against the S&P 500. Okay. So what we're going to use this for is to see the performance of how they all stack up against each other. Now, Misty only came into like its inception date was like last year, right? Sometime last year. So again, it's not going to have a lot of history behind it, but we're going to make things a little interesting here. So we're going to go with Misty and then MSTR. So 100 and then 100. All right. So we're going to go to settings. We're going to make this fun. We're going to make it $100,000 initial amount. Okay. No cash flows. We're not putting any money in. We're going to include year to date, and rebalance doesn't really matter. No leverage. Yes, we want to reinvest the dividends. Yes, we want to display income. And let's analyze this portfolio. So Fun Life. Hey, welcome to the channel, man. It's tax time. I'm sitting on a lot of cash, but I'm also at all-time highs in my portfolio today. So I don't feel bad holding cash in a money market fund. Excellent idea. That is an excellent strategy. I'm also doing something similar. I would highly recommend people hold a lot of cash right now, because we just don't know what the market's like. Take advantage of opportunities as they come up. But yeah, I would hold on to a sizable amount of cash right now, because we just don't know what's going to happen between real estate, stocks, and crypto. No idea what's going to happen. All right, so let's look at this. So comparing this 100,000, right? We have Misty, we have MSTR, and we have the good old trusty S&P 500. So MSTY, you would have an ending balance of $259,000. MSTR, which is the stock, you would have 283,000. All right, that is a 30%. That is a $30,000 outperformance basically a 30,000 outperformance. Almost, actually. I take that back. It's like 20. Um, Meanwhile, the S&P 500 only returned 116,000, right? Now let's look at the time. This is starting from March of 2024, right? This is like 9 months, right? 9 or 10 months, whatever it is, and you almost doubled your money with Misty. Well, you did double your money. You almost 3x your money, and you almost 3x your money with MSTR, right? So those are huge returns, huge returns. Now let's look at the income. Now Misty, no, we want to look at portfolio income. MSTY returned $167,000 in dividend income off that $100,000, right? But we, according to this, portfolio visualizer, we obviously reinvested that back into the portfolio. But you, I laugh about this because like Misty is crazy. Like this is not sustainable. Like this could not be sustainable. I don't think so. I don't know. What are your guys' thoughts? Like I was doing some math, like just playing around with this. If you started with 100,000 in Misty and you held it for 10 years, you'd be like a trillionaire. Like it would be paying it'd be paying you out billions of dollars. Like this is not sustainable, man. I don't see this as being sustainable. So speaking of sustainability, let's talk about like downside risk, right? What is the downside? Cuz I think this needs to be talked about. And some of you guys, I'm sure, are probably much smarter than me when it comes to all this. But let's talk about the downside risk, okay? Because you have this like huge rise from MicroStrategy, like a freaking crazy rise, and it doesn't look like it's going to stop, right? Because Bitcoin is just going to keep going up. So let's run a scenario. Let's just run a scenario just to pretend let's run a scenario, our own little, mastermind scenario, and see what happens. If you invested into MSTR or let's go with MSTY because this is what the main topic of the video is, so far. Everyone loves MSTY. Let's say you invested into MSTY. What could cause this to go down, right? Obviously, it tells you right here in the, let's see, boop, boop, boop. I think it's under, I think it's here. The primary investment objective is to seek current income. The fund's secondary investment objective seek exposure to the price of the common stock, MSTR, subject to a limit on the potential investment gains. Oh man, there was a, oh yeah, here it is. The fund strategy will cap its potential gains if MSTR shares increase in value. The fund strategy is subject to all potential losses if MSTR shares decrease in value, which may not be offset by the income received by the fund. So essentially, if MSTR goes down in value, MSTY is probably going to realize 100% of that as well. So again, just something to be aware of. So let's see. Wealthy Life says that is insane. Bitcoin is going to drop again. It will. Retire on Dividend says Misty has paid back 183% of the original investment from launch price. I wish I got in. Like there were so many people talking about this way back when, but I just never did. So we have G-Bro says, I am not smart in this stuff, just FYI. That's all right, G-Bro. That's why we're here. We're all learning together, right? Nerdy Film Girl, new to investing and trading. Happy to see this live stream tonight. Hey, I appreciate it. Thank you. Welcome to the channel. Not so much a trading channel, to be honest, because I don't trade and I wouldn't even know where to start. Instead, I would rely on probably the professionals to do my trading for me. Professionals like YieldMax, professionals like Global X. There's another one, Amplify, I think Amplify, and there's a couple other people. But yeah, welcome to the channel. But anyways, what would cause Misty to really like drop, right? If you were to invest in a Misty, what would cause that to drop? MSTR would obviously have to drop first, okay? But here's the kicker. MSTR's share price, I think, is at this point directly tied to Bitcoin. I mean, you could just look at both of these, right? If we do, yeah, you could just look at this rise right here, this pattern, and it's almost correlated with Bitcoin. Like if Bitcoin goes down in value, MSTR is going to go down in value. And if MSTR goes down in value, Misty is going to realize 100% of that downside risk. So what would cause MSTR to go down is Bitcoin. What would cause Bitcoin to go down? And this is the interesting part. This is the question, the $1 million question. What's going to cause Bitcoin? Is it going to just keep going up, or is it going to do the cycle? Like, this is, basically where we're at right now. Is it going to go down again and then go up, later on in probably 2027 or something? Or are we just going to hit this downward pressure, right? So this is my thought. Aloha, State of Mind. What's up? Hey, welcome back. Yeah, we're just talking about MSTR, Bitcoin, and Misty. So we're just talking about these. We just did a quick roll up of all this stuff. So if you missed it, of course I'm gonna have the recording. So anyways, going back to this, right? So what's gonna cause Bitcoin to go down? There's a couple different factors, I think, right? One of them is obviously going to be inflation, or inflation / interest rates. Let's just call it, they're almost basically synonymous at this point. So if inflation continues to stay elevated and the Federal Reserve acts in a way that they say, hey, surprise, surprise, guys, we thought inflation was coming down. We thought we were going to lower interest rates more this year, but because inflation is so bad and sticky, we're going to increase the interest rate, or we're going to maintain the steady interest rate. I think that would cause Bitcoin to go down. On top of that, right, if Trump implements those tariffs that he was talking about, if he does, and it causes, or he puts some type of policy out there that increases, inflation, the cost of goods and services and imports, then I think that will also put some more downward pressure on Bitcoin, because investors are going to start pulling their money out of it. Right, they're going to pull their money out. They don't want to deal with it. Bitcoin's going to drop. All right, another scenario, I suppose, that could cause Bitcoin to drop. Actually, let me take that back. So let's talk about that. So we just talked about the potential outcomes of headwinds, etc., the risks, but what could cause Bitcoin to spike even further up? And I covered this earlier. So you're going to have Trump that is working closely with, several groups, and he's, very favorable towards the crypto space. You have the SEC, and let's pull this up for you guys. You have the new SEC chair coming in that's very favorable to crypto. Yeah, so he's on his way out. Gary Gensler was very rough on the crypto industry. They were going after so many different people, so many different firms. But Gary Gensler is outgoing. The new incoming chairman, Paul Atkins. And I forget who Paul Atkins, he ran a fund or something that dealt with, or that invested in a crypto. But yeah, basically this guy served as SEC commissioner from 2000 to 2008, known for his pro-business stance. He's now the CEO of CEO consulting firm Potomac Global Partners, which has clients across the financial and cryptocurrency industry. All right. Very favorable for the crypto industry. Very, very good. This could be, a boost, and this could drive Bitcoin's price even further. And, there's also talks of deregulating a lot of crypto regulations, right? Removing capital gains on crypto gains. Yeah, and again, guys, I'm just brain dumping on you guys everything that I've found, or everything I've kind of just seen over these past couple of days. So yeah, Trump crypto plans have Wall Street CEOs ready to jump into digital assets. Right? Can't even be more clear than that. Can't be more bullish than that. Right? Wall Street's top CEOs told CNBC from Davos, Switzerland, which I got to see this this week. They're ready to go bigger into crypto if the Trump administration rolls out favorable policies. This was published January 24th. As part of Trump's sweeping promises into the digital asset sector, he has nominated multiple pro-crypto names to critical positions. You also have, Elon Musk. That's, I know he's kind of a meme in some eyes, but even he is like very pro crypto. Even he is very pro crypto, and he's looking at, eliminating a lot of government positions. So I think that's going to drop a lot of the red tape, drop a lot of the gatekeeping that's going on, and it's going to allow a flood of new innovation, new money into the crypto industry. So I think this is a good thing for Bitcoin, and this could drive the price up even more. But again, we still have to be realistic and keep in our back of our heads, what else is going on, and there are potential risks. Again, if Trump does go through with the tariffs and it makes inflation sticky and it causes inflation to stay steady, then the interest rate is going to maintain or even go up, right, by the Federal Reserve. So you got to keep all of this in mind. Yes, the market is very euphoric right now. Yes, the market is super excited for this, but you still, as an investor, as a very prudent investor, want to keep all this in mind. All right, so going back to the chats, It's a Wealthy Life says Elon Musk succeeds with Doge, Bitcoin crash. Yep, get in that Dogecoin. All right, G Bro, I've been referred to by PayPay and XPG for crypto. Not sure if I should go in or not. I'm not gonna say yes or no to either of them. To me, they're meme coins, so I don't even deal with meme coins. I just don't give them my thoughts. Fun Life asks, what is your POV on chasing div yield versus chasing growth? Reason I ask is I do both. I chase growth in my Roth, but dividend yield in my brokerage. Looking back, I think growth is actually the way to go. So great question. I love this question because XRP. Let me touch on Fun Life first, and then I'll go back to XRP because XRP is an interesting case. Okay, so let's talk about this. So dividend yield versus growth. Okay, I went through this myself. Okay, I went through this myself. I've been struggling with it myself because I'm a real estate guy, and let's just look at some stuff. I just want to give you guys this thing for awareness. All right. This is just, like an S&P 500 index, but for real estate. Okay. This has obviously not performed as well as, you might think. Like, this is a very stable, like, asset, right? Real estate's a very old man's, like, type of thing, right? Not very sexy, not very cool, not very out there, right? But if you look at something like VGT, right, which is a pure IT information technology, like, ETF, you get something like that. Now that is very sexy for a lot of people. Seeing something like this, right? This is really nice, right? Then you have the S&P 500, which is basically like in between the two, which is basically in between the two. Like if you were to put VGT versus S&P 500, VGT is going to win every time, right? Because tech stocks are very volatile. They're very momentum. They increase in value much faster, but the S&P 500 has like 30% allocation to tech, but it just has, other companies in the index. All right. So this is what I struggled with, because I could have very easily just went all into VGT, right? I could have just went 100% into VGT, but of course, everything is, we always look at things in hindsight. And then I was thinking like, okay, since I'm in REITs, I'm still getting the dividends, which is good, right? So what I ended on with is that you can have your cake and eat it too, right? And we call this diversification. We call this a diversified portfolio. You don't have to choose one or the other. You can have both, but you can't let comparison be the robber or the thief of joy. If you invest into something, you have to be self-aware that, this might underperform, but what is the objective for that, right? For me, investing into dividend paying stocks, I wanted the income with moderate growth, with share price appreciation, right? I didn't care too much about high growth because I already had a S&P 500 index. So you have to keep things like this in mind. You don't have to choose one or the other, because you can go with, a VGT, right? A tech heavy ETF, and you can go with a dividend ETF, right? You can have the best of both worlds. You could do 50-50, right? If we look at this, right, we're going to go with SCHD, because that's the master right there. And then we'll go with VGT. right? You could do a 50-50. There's nothing in the rule book saying you can't do that, and you're highly diversified. Um, we'll do 100. And then, I mean, let's just like look at what it would look like. 100,000 again. We're gonna reinvest everything. Boom, and we're comparing ourselves to the S&P 500. So if you look at this, SCHD, over the lifetime, and we're starting way back in 2014, so almost 10 years. 10 years. 100K in the SCHD would have gotten you $659,000, right? Ridiculous. In 10 years, that's almost a half a mil. Well, it is a half a mil. It's more than that. You have VGT. Wait, this doesn't make sense. Where did that go wrong? Oh, I guess that is right. Yeah, yeah. So you have VGT, which is high tech growth, right? Supposedly, but it didn't return as much. I mean, look at that, 284,000, and then you have the S&P 500. Wait, this can't be right. VGT should have outperformed. Oh, I guess it didn't. I thought it outperformed. Wow. All right. Well, I take that back. I thought VGT. Maybe if I use QQQ. Let me go back because this doesn't sound right. Yeah, this just doesn't sound right. No, I guess it is right. Wow, I did not know that. Okay, I thought VGT would have been the better play. But anyways, you could see right here, like, you can have your cake and eat it too, right? And you're diversified across multiple holdings. If you do SCHD or QQQ, I mean SCHD and QQQ, or SCHD, QQQ, and the S&P 500. Man, I just learned something just now. I really thought tech always outperformed the S&P 500. I'm so surprised by that, because if I took away SCHD, I'm just curious, man. Like I'm like really blown away. Yeah, because in this one, QQQ kills it. Yeah, I don't know, guys, but yeah, there you go. Maybe this platform is messed up. All right, I got to go back to the chats real quick. But yeah, great question. Again, Nerdy Girl says this is a great question. Absolute great question. How do you balance the two? Uh, I think you need to have your own objective. Like like why would you be investing into dividend yield, right? Why? Like, is there a reason for it? Do you plan to live off of it, earlier than later? Do you want to compound your portfolio? You have to have a reason for why you want to do anything. Why are you investing into dividend paying ETFs or things like that versus high growth? The way I look at it, I keep my retirement accounts on autopilot. I just put them into like an S&P 500 and call it a day. I don't want to think about it. I don't want to look at it. I don't care about it. I'll just let it compound over time. But in my active portfolio, in my taxable account, I'm looking at individual stocks, looking at REITs, looking for dividend yield, looking for these things. So this is the way I look at it. And I'm sure everyone will have no one size fits all. All right, just remember that personal finance is very personal. So you want to make sure that you do what's right for you. All right. Retire on dividends says I'm a yield max guy, but if you don't need the income now, then just invest in growth stocks. There we go. I mean, great advice. Great advice. Wealthy Life says I'm 65 to 70% net worth pre-tax in Tesla. I do my own divvies and my other holdings. Man, I still think you're crazy. To have that much money like in Tesla, you are man, dude, you are like, yeah, that is balls right there. That's crazy. Mark says I own FTech and extremely happy, coming from a Vanguard fan. FTech is good. I did a video on FTech and VGT, and they're almost identical. They follow almost identical. What is it? The MSCI 2550 technology index, and the other one's the MSCI 100 index. They follow almost identical indexes, but I think the difference was their allocation to Nvidia, or their ability to take advantage of one stock over another. I think that was really the difference between the two. VGT has more companies than FTech, so you get a little more diversification. Let's see. Nerdy Fangirl says SCHD is the first ETF I'm investing in. Excellent. Awesome. Retired Dividend says you can sell calls on Tesla for income. So Wealthy Life says, yep. Let's see what else we got. G-Bro says he actually has stock in QQQ. Awesome. Fun Life. My Roth is 125% unrealized gains. Congratulations. And my brokerage div yield is only 17%. What? Only 17%? Not including my dividends. I would rather actually have the gains, but I also make $2,500 a month in divs, which is nice. Yeah, I mean, like, I would be happy with $2,500 a month. I mean, I wouldn't even be unhappy about what you have. If you're looking to optimize it, that's a different ballgame. That's a different way of looking at it. If you're looking to optimize it, you should look at your time horizon. You know, like how old you are, when you plan to retire. You know, these types of things. You need to ask yourself these questions, and then you work backwards. Like, what should you be investing in? Like I said, I'm a very old man. Like I'm an old soul already. I'm a cash flow investor. I've adopted that as my strategy. So I invest primarily in cash flowing assets. I don't really like growth. Like I don't know why. I know it's going to bite me in the butt later in life. And can I pivot now and invest in growth? I mean, I probably can, but I don't know. I don't want to. I just don't care. I don't know. There's a lot of people who are like, who would say that is horrible advice. That's a horrible way of looking at it. But I don't know. There's real estate investors who are millionaires and they're living very comfortably being cash flow investors. There's dividend investors who are living very comfortably being just dividend investors. You know, so it's not like one size fits all. There's traditional advice and then there's advice that fits you, right? And there's a path that fits you. So not to get very, philosophical about it, but I mean, investing is there's no one size fits all. It's what makes sense for you. Retire on Dividends says that, well, you can always go far enough out of the money that you have a good chance of keeping them, and you're in the risk side. Oh man, when you get into trading talk, I can't keep up, man. I just don't trade. Like I'm not gonna even lie. Let's see. Wealthy Life says I have 2 divvies at 90K in value. I make 9,500 a year on these 2 bad boys. Let's go. Let's go. All right, guys. That's going to pretty much do it for this live stream, guys. Like, I just wanted to share some of my research that I came across and kind of talk about, my pick that I've been like really looking at. I'm going to be coming out a video that kind of explores everything we just summarized or everything we just talked about. Cause I think this is a really interesting thing, right? Understanding like the yield max, how it works, and then how MicroStrategy really works. Like what is this? Like, cause I looked at their financials, man, and I'm telling you, if you look at their financials, it is disgusting. They're not making any money. The way they're making money is Bitcoin, is having their whole company tied to Bitcoin. So that is to me really scary, but I don't know. I'm not Michael Saylor. I'm not $100 million man. So, but yeah, guys, that'll do it for me. I hope you guys really got a lot of value from this stream. I hope you really enjoyed it. Mark K says, thank you. Great video. Look forward to more. Hey, Mark, I do appreciate it. First off, I have some videos, that I do post, and then I plan to do these lives a little more, often, like every single day, except for the weekend. But I plan to do these lives a little more, and, it's just coffee, money, finance, real estate. That's it. We'll just talk, get on, just talk shit, I guess. It's a Wealthy Life says, this was great, Eugen. Fun times. Absolutely, man. Absolutely. I always appreciate when you join, man. Nerdy Film Girl says, there are so many routes, which I think is overwhelming for new investors, but people like you were able to break things down well and appreciate it. Thank you so much. That means so much to me. I do these videos, just out of the kindness, honestly, out of my heart. I really, because when I started, I had no help. Like, there was nothing. I had to learn everything basically from scratch. I have the scars to prove it. I have the scars to prove it. And that was between stocks, crypto, and real estate. So I've been through the ringer a few times. And I'm not afraid to share my losses. I've lost well over $20,000, like, investing. And I mean, like, real losses. But yeah, definitely appreciate that. It means a lot. Thank you so much, Eugen. Looking forward to more. Hey, appreciate you, G, bro. Thanks for joining. Mark K sounds good. Awesome. All right, brother. All right, guys. Appreciate you all.